The Internet of Things. It's made us reevaluate our thinking. Financial institutions, banking, customer relationships, how business is done, and how lives are lived. All are changing right now. Industry, business, phones, cars, homes, even the cities we live in, all are becoming smarter. With nearly 5 billion devices already connected, we could see this increase fivefold by the end of the decade. The Internet of Things is transforming the shape and form of digital commerce and services, sensor-enabled consumer data, supply chain data, behavioral and cultural data, a pin-sharp view of supply and demand at any given point. But which data will maximize revenue streams, streamline processes, or help us pursue new business? And fundamentally, what are the implications for banks' core platforms? Disruptive business models born of the third platform, social, mobile, cloud, and the millennium generation continue to challenge platforms. How much more response will the Internet of Things demand from banks? Flexibility, scalability, payment models, standards, regulations. And then there's blockchain technology. And how do we keep up with the pace and complexity of this unstoppable change, harnessing it to our advantage whilst prioritizing security? Technology must be the basis of every decision we make, 24 hours a day, 7 days a week, 365 days a year.
Good morning. I am Craig Young. I'm the Chief Technology Officer at Swift, and I'm delighted to see everyone here at Sibos this morning. It is my privilege to introduce our big issue debate this morning on the Internet of Things and bank core platforms. With us here today on stage, we have a panel and moderator of great expertise. Patrick Mays, who is the Chief Technology Officer and General Manager for ANZ. Michael Gures, who is the Group Chief Information Officer for Technology and Operations at Standard Charters. Oliver Busman, who is the Group Chief Information Officer for Group Technology at UBS. Each of these three bring an incredible wealth of experience to the IT industry globally, and as does our moderator, Kathy Besant, who is the Chief Operations and Technology Officer at Bank of America, where she's responsible for technology and operating services end-to-end across the company. She manages a team of nearly 110,000 employees across 34 countries globally. She most recently ranked number 2 on the Institutional Investor Tech 50, and even more recently was voted number 6 on the American Banking Most Powerful Women in Business Banking list. So with that, Kathy, I'll turn it over to you and enjoy your session. Thank you.
Great, Craig, thank you. All right, good morning, everyone. We're going to have a great conversation with a really distinguished panel on the Internet of Things. And we plan to, I think, have a little bit of discussion, a little bit of debate, see where we have points of agreement and points of a little bit of dynamic tension. So why don't we go ahead and just dive right in. You know, when I think about this, I think about the Internet of Things, and I have my own definition for what it means. Internet of Things is a little bit like big data or cloud computing. It means a little bit of something different to everyone. So I thought we'd start and ask our panelists, what does the Internet of Things mean to you, and what do you think it means for banking and financial services? Patrick, do you want to give us a start there?
Yes. I would call it Internet of Everything and Everybody, because it's not only about connecting 25 billion IP addresses. I think more closer to home and more medium-term Internet of Things for the banking industry is about connecting better with our customers. You know, especially with the digitization of the channels, I think we have lost a little bit the context in which our customers operate. We see their transactions, we see that they are looking at the balance, they're doing a payment, they're buying something in the shop. But the Internet of Things allows us to connect our own touch points, combine them with other touch points as social media, the internet, but also person-to-person connectivity and create a context about what really matters for our customers. What are the life stages they're in? What are the events that they really care for? Once you define that context, then as a financial institution, you can then think about how can I supplement my product capabilities by more meaningful advice and orchestration services, and help these customers in their goals and in their events. For instance, buying and selling a house. It's a pretty stressful activity for most people. Imagine that as a financial institution, you can do the orchestration between the two legs of the transaction, and that requires context. So once you can do that, what I call life stage banking, so moving from products to more the advisory and the orchestration services, then there's a third element that becomes possible, and that's creating small ecosystems. Because, of course, you cannot support these life stages and these events on your own as a financial institution. You need to collaborate with other partners in that ecosystem. And I think that will allow the financial service industry to move from a product supplier, a typical product supplier, to an ecosystem player. And we see already in industry small examples where this is happening, but that's what I would call the Internet of Things. Yeah.
Mm-hmm. Michael?
Well, Internet of Things, as you said, is about wiring everything. And this puts an enormous challenge on banking, because the banking system so far, or the systems so far, they have been built for normal operations between humans. And humans tend to sleep at a certain point in time, which became a little bit more difficult with all the globalization, so not everybody is sleeping at the same time. This is the first stress on our systems, but with Internet of Things, what will happen is that the things we connect, they definitely don't sleep. That means the notion of real-time banking, 7 by 24 hours, no downtime, no planned downtime, nothing, this will put a lot of stress on our total ecosystem. The second part of it is nobody knows what the future will bring. So which kind of devices will be wired, which kind of transactions will be done by these wired devices, nobody knows. And this is actually something which banks don't like, surprises, fast changes. So the whole way of working within a bank has to change in order to keep pace with these ongoing speed and changes.
Oliver, what's your perspective?
I think for me, the Internet of Things is the real world, the physical world, and the virtual world is coming together, connected, and is driving a new customer experience, user experience, more integrated end-to-end that we see more today, more isolated. It's becoming integrated end-to-end. And that drives a higher expectation from a customer perspective, looking at us, expanding our ecosystem, doing much more than we do today in integrating our services into that ecosystem. And also the expectation that out of those connected dots that we use the information to anticipate the customer needs. Because there will be a lot of more data out there through those billions of connected devices. And at the end, it's changing customer experience, changing customer expectation, and our job is to integrate this and play an important role going forward. Mm-hmm.
I think that's all, very different perspectives, but very enlightening. But I think about it this way, producing all of what you're talking about costs money, right? And there has to be a commercial aspect to what we're doing as we think about the use cases for the Internet of Things. How do you think about this commercially? What do you think it is our customers and clients will really pay for in the space of connectivity that you're talking about? Michael, you want to start on that one?
Well, this is a very, very tricky one because it will actually go into the core of banking. We used to earn our money with interest arbitrage, sometimes a little bit of fees. Now think about the pervasive internet where a lot of companies are offering services for free. This actually gets the people used to the fact that they get things for free. So a normal retail customer hardly pays anything for their retail accounts in many geographies. And this obviously is really life-threatening for banks. So where do we get our money from? This is actually even made worse by a lot of companies coming in and take the easy part of our job out, payment services, and also offer them for free, at least from the point of view of the consumer. So we are sitting there with the whole legacy of our past, and we are threatened, disintermediated from our customers by these new companies who picking the cherries out of our value chain. What does it all mean for us? We have to think about where are possibilities to earn money. Is it getting money from the customer by just charging fees, or is it actually another kind of business we can go into, which could be, for example, we take the data, anonymize it in the right way, and sell it to somebody else? Because we know where the money flows, which is actually an information which could be valuable to some merchants.
Mm-hmm.
Who else has a view?
I have a view on this. If you look at the complete fintech ecosystem, I don't think that if you look at fintech, there are two types of fintechs. There are fintechs which are providing convenience service on top of a banking service, and the fintechs who are doing what I would call regulatory arbitrage, the lending clubs of the world. But no single fintech has replaced a bank yet. Yeah, that's very clear. And it is also very clear that most fintechs make their money by providing convenience at a certain price, because giving something for free is not really a business model. I think that the banking industry is about moving from products to selling convenience, because I don't want to have 50 apps to do my banking. Yeah, and nobody wants 50 apps to do the banking and have all these fintechs have the problem of orchestration of all these different applications and services. So I think there is a business model in creating ecosystems and really offering and value-adding convenience and advisory service to our customers. And customers are willing to pay for that, more than for the transactional element.
I think the commercialization of the Internet of Things is a huge opportunity for the financial service industry, but we have to do it right. Mm. And let me explain. If you come from a customer perspective, if you look at those connected devices and businesses we handle over that, has to be secure, reliable, should be trusted. And that's pretty much also linked with the financial services and the banks. They have that trust level. But that requires that looking at the volume perspective, it's multiply higher what we do today in the financial service industry, because the numbers of devices connected will be totally different. And from that perspective, we have to think about how can we handle this. It will be in the payment area, micropayments, in the trade finance, everything related to smart contract. That requires a different way how you handle that volume, maybe totally moving away from a centralized approach that we do today in banking to a more decentralized, and leveraging technology out there that enable us to manage this, but again, in the most trusted, reliable, secured way.
On this customer experience, I think both of you mentioned that. That's probably the lesson which we have to learn most. I mean, what happened? In the past 10 years, there were so many companies out there which were able to really offer a superb digital experience. So I don't want to mention name because I don't want to, but there are big buying platforms, and they know exactly what I did over the past years. And I was so used to it that I really was astonished that my own bank cannot give me some good advice in some very decisive moments in life. So, for example, 3 months ago, I changed my city, my industry, and the company, and there was no bank advice behind that, although they should have found out that there was something going on. So what we have to learn is to look at the customer individually and really tie this imaginary ribbon made by technology and tie the customer in during his whole lifespan. What this means is the building of trust which we had in the past was always actually based on the personal relationship. You had your REM, you know him, you went to him and you asked for advice now and then. This concept is actually no longer sustainable because it doesn't scale, and actually people are no longer so much fixed on people. But there is another element of trust which we have to build, and this is trust today, I would say, is actually the fulfillment of your expectations. So I expect something, and if the entity behind is fulfilling that expectation, electronically or however, I feel I feel trust, and I stay with this entity, and I'm actually willing to buy, willing to pay for it because I feel good. So we have to go from the trust building, which was before human relation, into trust building electronically or digitally. And that's a very big change in the operating model.
We were talking a little bit in the green room about the Internet of Things and the complications that come from for those of us who operate in multi-jurisdictions. What's your sense of the privacy, data, legal framework? How do you feel? How do you start to think about this globally versus country by country?
Yeah, we have seen last week the announcement of the European ruling of the Austrian student, towards data protection for their Facebook account, where they basically said the safe harbor agreement is basically not giving adequate protection for data. I think this is a really issue for the world, that we don't have a global data protection act or a legal framework, that there's a huge difference between the US and Europe, for instance, and that is potentially blocking the Internet of Things, and that needs to be sorted out.
Yeah, I think
on a global basis. Yeah.
I think that's a huge challenge. As I mentioned before, I think the regulation is more focusing on managing local risk, to minimize them for the local jurisdiction. On the other side, if I look at the technology coming up, we're moving away from a very central model, which you can apply for the local jurisdiction, to a very scalable, distributed environment that using a cloud environment, using different resources, and it's then very hard to also predict where is my information at the end. If I look at the distributed ledger blockchain, you copy this information, make it more reliable. Now it's in country A, B, or C. It's hard to predict. So I think, as you said, will be a clash going forward. And this maybe will limit our benefits and scale going forward if we don't overcome those kind of hurdles.
Well, we made it 18 minutes without hearing the word blockchain. Let's talk a little bit about something that's had a lot of buzz as we've experienced Sibos this week, and that's APIs. How do all of you think about the need for open computing and the intersection between open computing and the Internet of Things, and typically what has not been in our DNA in terms of how we've thought about the world?
Well, I mean, with the latest decision of Europe, this makes it a little bit more complicated because you will not be able that easy to use APIs with clear unencrypted information. If you encrypt the information, then obviously the whole notion of sharing it will be difficult because the content is not obvious to the other side. I think APIs are a very good thing, and even if I don't think it's a good thing, I have to work with them because the world is full of APIs, so we have to embrace it and work with it. The question is, where are the APIs which are useful and allowed in regulatory terms, which we can explore, and which are the APIs which are just not possible or doesn't make sense because they go against some legal requirements.
Yeah, a lot of literature about the APIs is about external APIs. There's only a very small utilization currently. APIs is not something new, already exists for many years in a typical IT architecture. But an API allows you to decouple multiple layers of your architecture. If you, for instance, want to go to real-time payments and you have still legacy core banking or legacy ledger systems, how can you support real-time payments? Of course, by using an API and having something in the middle. The API also allow you to decouple your IT organization from the IT organization that looks after the core, that has to be stable, and has to be well tested, and has proper SDLCs, to more the agile part, which is doing the app development. And the API basically gives you that integration layer between the apps development and the core. So it allows you as an organization to be more agile. And of course, it also allows you to interconnect with other partners in the ecosystem. But I think that's very early days, and because of data and so on. But it is absolutely a capability to make your internal IT organization more flexible and agile.
I think if you step back for a moment and look at the financial service industry and then also the fintech community, One of the key learnings for me in the last 12 months is out of the research is that the universal banking model and the services are getting unbundled. If you look at the fintech community, you see dedicated services, highly digitalized in the lending space, payment, investment management. The key question for a bank going forward, especially in the retail banking, is what's your core that you have to manage as a service and offer also integration services, APIs, to integrate other services available. So there will be an ecosystem of services, and it's important for a bank to figure out what is my differentiation, my added value that I have to own and protect in intellectual property, but on the other side, becoming an integrated marketplace to bring those services into the customer base and drive differentiation.
I mean, what Patrick said, absolutely clear. The internal use of API, that's a no-brainer. I mean, it's clear. Yeah? The external use of API, that was a point I was referring to. And then there is this gray line where we have ecosystems. Then APIs are very helpful because that's legally already possible, and will enable both of us, our customer and us, to be more flexible and faster.
Michael, you said at the beginning of our discussion that we're all going to have to think about the ways we work very differently, and we can't even have a few minutes of this conversation, or any conversation really, without thinking about fintech and thinking about fintech versus banking, fintech as banking. How do you think about how we have to work internally differently, and what's the model for banks as fintech companies?
I can pick it up. You know, there's a topic I'm very passionate about. Fintech is often seen as disruption. First of all, disruption is, I don't think there's any disruption happening. There's just change happening at increasing speed. And because we had change for the last, as long as humanity exists. And in fact, another error we often make is we look at the current players to predict the future. We are closer to 2030 than 2000. Yeah? And most companies we're talking about, as the Uber, the Twitters, the Facebooks, will probably not even exist in 2030. So it is important to look at what the future can entail. The fintech, I think it's an opportunity. And that's what we have done at ANZ, is built an ecosystem of university partnerships, deep partnerships with incubation centers and fintechs, because they are fundamental problems that we have to deal with as an industry to become a digital industry. Because I don't think there's any bank in the world that can call themselves a digital bank. And I give you 3 examples of fundamental problems we have to solve. Endpoint security is not solved yet. Blockchain. You can't implement a blockchain capability on your own. You need to do that in an ecosystem approach. Always on. And we have NPP coming, a new payments platform in Australia, real time, with 5 nines, 4 minutes outage a year, which basically equals 100%. For the technologists in the room, how do you do that, 100% availability of services? Because you can't do it with hardware only. So these are fundamental problems that we as an individual bank, or even as an industry, will not be able to solve. And the only way we can solve that is to work closely with the MITs and the Stanfords of the world, and with the incubations and the fintechs, and build an ecosystem of collaboration where we try to solve these problems. And my experience with fintech is they love that. They don't want our money, they want our equity. There's plenty enough for VC money in the world. But what they want to do is to use our platform and the fact that we're operating in 35 countries in Asia and test out their ideas. Yeah? And that's what I think is fintech. It's not about disruption, it's about collaboration and solving fundamental problems for the financial industry.
Yeah, but that's exactly where the clash happens. Huh? So this fintech companies come into banks like ours, and they find, wow, that looks a little bit different than I used to work. And looking at the space of the fintechs, I mean, what is a fintech? I mean, it's a bunch of people, actually same kids, same schools, they use the same programming language, even speed of light is the same for fintech companies as for us. So the fundamental difference is they have normally 1 or 2 guys at the top, they have a crazy idea, they got not very much money, so they get funded just enough to make the payroll at the end of the month, but they are so eager to change the world. And they don't know whether this has a good outcome. And as we all know, the startup companies 85% fail. But it doesn't matter. Just this morning I was talking to somebody, he said, it's my 7th startup. I said, well, you're still alive? Yeah, sure. And this is something which in banking is just not acceptable. Because hierarchy tries to control everything, puts KPIs around it, and if you are not successful, you are punished. I mean, our evaluation system at the end of the year. How do I evaluate a team which tested something out and deliberately said, no, this does not work? Actually, I should give them 120% achievement because they know that's not the path to go to. But actually, that's not the way banks work. Banks work, okay, you failed, gone, fired, go to ANZ. And obviously, this is fundamentally not enabling innovation.
I think we are far too technical here because it's not, yes, it's about new technology, but at the end it's about new business models, the way how you introduce services, how you offer services, etc. That's the thinking that sometimes it's hard to find within the banking industry. So for us, it's important to embrace the fintech community because there are a lot of ideas that we can make scalable, secure, and reliable, and using that intellectual knowledge and capability to bring into our internal community. This is the reason why we believe we have to be part of that ecosystem. It's a give and take that we're spending time with the ecosystem. I do mentoring. We are out in those labs. We are open our labs. We have to move ourselves out of this black box that we want to protect everything. We have to be part of that change. Yeah. If we are not part of that change, I think we're getting obsolete. Very clear. And again, for me, it's not any technical limitation because looking back, those challenges, I think the community is able to overcome. If you talk about scalable security, there is the open source community out there that are eager to solve that. Yep. And if you look at the financial resources coming into the fintech, last year was $12 million invested. This year, roundabout forecast 19 to 20 billion. And I think we have to put this into a relation. Yep. Now, if you look at 1995, first internet investments, $250 million. I think it's a clear indication we cannot ignore what's going in that industry and the fintech startup, and we want to be part of that. And it needs investment, needs commitment, be part of a community. And again, it's not only a technology play; it's the way how we embrace this and change our business models.
Yeah. Well, I think it takes energy, it takes commitment, and it takes talent. So, how do all of you think about the talent in your organizations today, what kind of talent you need to move the business model forward like we're talking about? What do we need to be doing differently other than hiring each other's top talent in a round-robin sort of way?
To be honest, I don't want to hire talents out of my peers. That's, I think, the wrong way to evolve our business at the end. I think we have to think about other industries. You know, if you look at the way how our industries is evolving, especially from IT and support function, looking at too big to fail. I think we will set up service companies, we will compete for business going forward, and this requires a different skill set, how we engage with our customers, how we manage services and products, so service and product management will be there, how we run factories, how we develop software. It's becoming a software development organization. I think those kind of skills I would not go after in the banking industry. I think we have to look for those kind of expertise in other industries, university, etc. So that's something we have to embrace going forward.
Yeah, absolutely. I think the future model of a bank is probably going to be more as a software company than traditionally a product-oriented operating model. And that basically require people which have multiple disciplines. You know, I've seen how people with an economical background, software engineering background, you know, have multiple disciplines. They can do wonders, but you know, you need that talent, and you cannot do that in a current product-oriented operating model.
Just adding on what you said, the domain knowledge is very important if you want to bank a broader variety of commercial customers. Obviously, it's very helpful that you know what's going on in their industry. So therefore, it's not about the technical knowledge, but it's about the business domain knowledge, which you should bring into the bank. I mean, I'm maybe a little bit extreme case, going from automotive into banking. Whether this is helpful, we find out. But it's really good that you know the other side of the story, and you can talk in their business terms.
Any other point of view?
No, I think, as I mentioned before, I think talent is important, and the right mix of talents out of the other industries, I think, is essential going forward. But maintaining that business domain expertise is critical too.
There are two sides of it. If you say wholesale banking, then obviously it's clear it's the other companies we are banking, which is helpful to get in. If you talk retail, then it's good to have talent from companies who actually have experience in retail. Sales or other companies, not just necessarily banking, because retail banking, from the banking point of view, is not that difficult. I mean, it's more about the customer experience, which I was mentioning earlier, which you have to have knowledge of and have feeling for.
Let's talk about the commercial side of the business, the wholesale side of the business for a second. The Internet of Things, obvious application in consumer and retail. What are you hearing from your clients and customers and your businesses about the pull that exists or doesn't exist for the same concepts we're talking about, but existing in the wholesale space?
No, I think the first area domain I think that will be disrupted, looking at the Internet of Things and then also using new technology, is definitely the whole trade finance area. If you look at the way how this is now being handled between the customers, with the insurance company, the banking and buyer and seller, it's very complicated. It takes a lot of time. It takes a lot of paperwork. You're talking about 500 pages, etc. And then you're talking about goods that they're on the road, on the ship, etc. That you can easily connect and measure where it is, and then link to those kind of contracts. So I believe that looking from a wholesale perspective or institutional perspective, this is an area that is ready to be disruptive. And I think a lot of banks and peers are working already on that and leveraging technology that allows us to do so. I think we will see, we're pretty sure that soon that this will happen, and an industry that is acting for many decades on that topic, the way I describe it, I think will be simplified massively going forward.
Yeah, we see the same patterns in wholesale and in consumer about also the customer experience. The CFO of a large corporate also wants to do this, is liquidity management or cash flow management from the golf course. So from a mobility perspective, bringing transaction banking, trade finance, FX, markets together in an accessible portal, I think that's a given. But indeed, the underlying process is still very manual often and very paper-based. And instead of doing electronification of paper, which doesn't really solve a problem, there is an opportunity now to really link the different elements in the value chain with the financial transaction and make that less cumbersome. Absolutely.
Well, actually, when it comes to trade financing, then obviously we are talking about physical goods. And physical goods, these are the things which are supposed to be wired or internet connected somewhere. I mean, I have a hard time to think about how you can give a sack of rice, a bag of rice, an internet tag, but somebody will find out about it. But at least you can put around the container something which tracks it. So therefore, there will be some technologies coming up which hopefully make our life and the life of our customer a little bit easier, because the trade financing, this hasn't become much easier since the last 500 years. So here we need some technology help, and so we should take on whatever's available.
Let's pull up for just a minute. You are all technologists. You run big organizations in big banks. And yet we all know, when we admit it anyway, that the technology parts of our financial services companies are the parts of the world that people actually love to hate or hate to love. Tell me how you think about the changing role of technology functions in your firms and the intersection and the interaction with the lines of business that you're all supporting and working for and with every day. How is that model changing?
Yeah, I can start if you want. I hope I will not hate it, be honest. But I think traditionally banks had a very classical way of doing IT. You have a big IT organization which was doing basically all IT in a bank. Then you have the business who come with requirements, and you had, of course, the interspiel between business and IT. I think this has evolved now, and I think there's still a role to play over the traditional IT organization, but that's more about the core account keeping, transaction processing, which is, of course, which are the crown jewels of any bank and needs to be secure. But more and more IT is being done now in businesses and even in ecosystems. What Gartner calls it the shadow IT. I would not call it shadow IT because it's proper IT, but it's done by the business. And the role of the IT organization in doing that is not so much doing the work, but basically helping the business build the apps or build the customer experience that they're aspiring. And that's a completely different way of working together with the business. And then you have a third role, is basically the role of an API provider that we discussed before. And if you look at these three layers, then I think the traditional criticism we get of IT is slow, IT is expensive. Of course, if we do change on our core banking systems, they cost a lot of money and they're slow because they should be properly tested, they should be done carefully. And no single business person would disagree with that. Where the disagreement is about why does it cost so much, and why does it take so long to get an app available. And I think if we break up the IT organization in these three layers, core, API, and then more the app development, the creative part, then I think the relationship between business and IT will become much better.
I think it's important to, if you step back and look at the IT function, that we are performing different roles. And depending on in which phase a bank is or financial institution is, you have a different allocation of time and resources to the three different roles that I can see. One is definitely we have a functional responsibility, and you get measure as a CEO that your IT function is getting best in class, the way how you provide services, how you run infrastructure, how you run your support organization, etc. It's a pretty fact-based measurement of the way how you run the IT organization. The second part is helping the business to transform. Having the right people in place on the IT side to understand the business, where the business is going. And this is important. It's not like providing functionality or services. It's also to translate where the business want to be in the next few years from their end state and try to translate this and into target state where the IT landscape should be. And that's a lot of translation work and business domain required and execution capability to perform on that. And the third dimension is helping the business to understand what kind of disruption technologies are out there that could evolve the business model and operating model of a bank. And bringing those expertise together, connecting the dots, it's critical more and more for a bank going forward in a very digital world to have that expertise, business and IT expertise, to know what's going out there, how can this be leveraged, how can the own service and product portfolio can evolve over time and provide, and I have to say I'm acting kind of head coach, providing a work environment to bring those different ecosystems together, allow them to validate ideas and then bring them over into the traditional portfolio, investment portfolio, I think is important going forward. But depending on where you are from a state of a bank perspective, you spend more time of that. You know, if I look back at my jobs, it's always that the first 2 years you spend more time on the functional and transformation role, helping the business transform your organization, and then you have the time and space to spend more time on the technology, on the innovation space, piece, which is critical for the evolvement of a bank going forward.
I mean, I hate the word business IT alignment because it shouldn't actually exist in a bank. In a bank is I would say, if banks were invented today and not 500 years ago, the bank would be an assembly of PayPal, Lending Club, Robot Advisor, and all these kind of colorful names glued together with some APIs and a few risk people around it. So that means the bank is essentially a big computer. So what I ask my business people to do, they have to understand the IT investment plan and into a detail that they can explain it to their kids. On the flip side, I have to understand the business plan, so which regions do we bank, what kind of customer segments do we serve, and I have to explain it to my kids. And if this works, then we don't have this issue of non-understanding, because then everybody owns the plan of each other. Which means in day-to-day life, there are obviously these mundane things when you have to rip off a core banking system, replace it by something else. So this is not something which you can do in an agile team, not very good. So you have to do waterfall stuff. So this needs a lot of convincing and alignment on both sides. But then there is this testing these new things, agile development, and here we anyway sit at the same desk. So the product owner, the scrum master, and the coders and the user representatives, they sit in the same room, and therefore they very much understand each other because they work on the same target on the 3-week scrum. So here the question of IT alignment is no longer relevant because they sit at the same table. Absolutely. So the combination of the two things with a wise decision, when you go one way, when you go the other way, that's what the CTO, the CIO has to do.
How have your individual roles changed? You talked a little bit about it, but how do your organizations hold you accountable? How do your business partners hold you accountable today or 5 years from now versus how they hold you accountable today? What are the attributes of the most successful CIOs in financial institutions 5 years from now?
I think it's much more transformation-oriented, transformative, less the traditional IT. And the transformation is about the digitization of the complete company, which is more than just customer experience. It's end-to-end. It's also digitization of the employee experience. But it's definitely more transformation-oriented, what I've seen in the last 5 years. Yeah.
I would add to this. The transformational has a driving element. So yes, I see myself in the role to drive here and there, but essentially, and this is unfortunate, we have to be able to deliver. So to be just at the right place where business change takes place, and to have the delivery capability. And this is now, and this is different to the past, this is not only internal resources, this is the ability to adapt external resources. So I would claim myself happy if next year my business constituents comes to me and say, Michael did a good job. We had all the projects which we had on mind. We know we had to scale back a little bit, but the things which we agreed on, we fulfilled and we did it. Then I come happy to Geneva.
Yeah, I think, first of all, I think it's important to acknowledge that we are the backbone of the bank. So we have a huge responsibility looking at our volume that we have to process and making sure that everything runs smoothly. I think that's a responsibility that everybody expects as a minimum. So to keep up the infrastructure, keep up the landscape to a state of the art is critical today and also going forward.
Yeah, the two things. It's a run side, obviously, there's no question. That's table stakes, which you have to do. But on the change side, it's this little fine difference. So what do you
try to explain that? The second part, again, we should not ignore the backbone, because again, this is whatever you do on the transformational side and innovation side has limited value if you run into that issue, because that becomes the number one pressing topic. The transformational side, I would call us out as we have to be change agent. Understanding, what are the regulatory changes, what is going on in the ecosystem, and try to understand, to translate it, what does it mean for our business. And that translation is critical for the success of our industry going forward.
Yeah.
Mm-hmm. You all mentioned in different ways external resources, and lots of Sibos attendees who, I don't like the word vendor, but who are our strategic partners and the people that that supply us capabilities and operating performance that's really critical to what we do. when we think about the Internet of Things and we think about the ecosystems that you're describing, how do the third parties that work with us, how do our suppliers, our strategic partners, our vendors, how do they have to be thinking differently, and how are your expectations of your strategic partners changing?
I think, first of all, and the focus is really from our perspective on strategic. Because in a more regulated environment, I think focusing on partner that from a scale, global coverage, being also in line to understand also what's required from a regulation, compliance, risk perspective is critical going forward, because even the regulators are asking us, how you manage your partnerships. And selecting those partners is an important decision today and also going forward, and utilizing that partnership to utilize their skills, global reach, etc., to transform and execute those transformation. It's an important decision.
Indeed, I agree with that. I would even go further. Look, if you look at the example of a cloud provisioning, for instance, the regulator, as the Australian regulator, sees cloud provisioning as material outsourcing. That means you need the same controls on your technology partner than when you outsource, when you do a BPO. You know, if you have to do that for each individual technology provider, there's a huge amount of administration bureaucracy. So it is important you create very close relationship, partnerships where there's a win-win on both sides, but a deep understanding of each other's strategy. The second point I would like to make, and is a little bit controversial, there is, I think, in the financial services some obesity. Obesity in the vendor landscape. It means if you look at the big partners that provide services to banks, most of their components, most of the applications they're providing or have some legacy elements in it. And I think there is time for a little bit a refreshment here. Because if we really want to get that agility that we require as a digital industry, we can't keep building our capabilities on these legacy assets. And I think both the time to market as the pricing needs to be corrected from a vendor landscape, comparable with the automotive of steel or any other industry, which are significantly cheaper.
Yeah.
Michael, what about you and third parties? What are you thinking?
Well, first of all, in banking, it's increasingly more difficult to include third parties in your value chain, because you have to do the third party assessment, and actually the bank stay with the risk, whatever they do, whether they outsource it or they put it inside, so keep it inside. So therefore, the willingness to give something out is actually rather decreasing than increasing. However, we have to extend our capability portfolio by external partners. So I'm looking for partners who have distinct and specific capabilities in areas which I don't have. So don't come to me and say, well, we have 10,000 people who can code Java, we do it better than you do. I don't believe that, because they're all from India, and therefore there is no such big competitive advantage. But if you say, I have a special knowledge in, let's say, onboarding customer with all the services around, then I'm listening, because that's something we're all suffering, and that's something I would buy into. So the specialization, and I learned this from the car industry. In the car industry, there are people who make tires, there are people who make ECUs, there are people who make gearboxes, and they do it very well. And because they do it so well, they have various customers whom they sell it to. And only if somebody comes in my office and can show that he has a specific knowledge in a specific area where he was able to sell this to various companies or various banks, I'm listening.
Let me add another spin to the topic, and you're absolutely right. I think it's all about capabilities and services that somebody can bring into the game. And I think the whole topic, third party, I think will get another spin, because if you look at what's going on from a regulation in our industry, we move from a too big to fail resolution plan into a very ring-fence local businesses. That requires also from a resolution point of view, capability to still perform our business if one of the entities is in trouble. The whole service company business that will be set up required going forward in a different jurisdiction. And as we know that from a regulation point of view, merger will be very difficult today and also going forward of our industries. I think we will see in setting up those service companies more that we see our industry teaming up with partners, third parties, teaming up with each other, joint ventures, utilities, and leveraging our scale and reach. And that dynamic, I think the partners with having the right domain expertise, commitment, capital bring into that will change the landscape over the next few years, triggered by something to minimize risk, but also triggered a more commercial mindset.
Yeah.
Well, we're at Sibos, so I have to ask the question, when we're thinking about external parties and their role in the ecosystem that you're describing, what about the role of SWIFT? How do you see SWIFT playing in the ecosystem of the future?
I think we have in Australia an absolutely great opportunity that we're building out together with SWIFT, which is the new payments platform. It's real-time payments in the retail space using all type of aliases. I think this is a great step for SWIFT, moving from the typical high-value international space into the domestic low-value space. And I think this will be a very important step to, the principle that I always talk about, payment. The payment is a payment, and we move to a world where a payment will be a payment, and we don't make any more that artificial differentiation between high-value, low-value, domestic or international. And I think we are very excited about that.
Other points of
essentially,
view?
SWIFT is our messaging backbone, as everybody knows. We use it everywhere. Actually, at the moment, we are in this screening challenge, so everybody has to do it, and therefore, I think we banks should help each other, talk to SWIFT to standardize a little bit more, that the messages we shoot across are more helpful for our screening process. So I'm specifically talking about country information, where it comes from, source, target. So these are things maybe we have to be a little bit more active and a little bit faster to make it even more useful.
I think, first of all, I think SWIFT is really a highly recognized and respected company and brand that we heavily rely in our financial service industry from a secure, reliable, trusted, etc. And you see businesses growing, and the partnership with SWIFT is, from my perspective, really outstanding. Let me focus more on the opportunities, because I had an excellent meeting in the last few days with the SWIFT management, and I believe what are the key differentiation that SWIFT is bringing to the table will help us also moving into, I would say, the new world. It's all about reliable network, secured, identity management, etc. I know we didn't discuss so much this morning about distributed ledger and blockchain, but I believe those kind of services will be critical to introduce that, because you need an environment that is reliable, secure, scalable, and SWIFT can provide that. You have to know your counterparties, so identity management will be critical. And I think the brand, highly respected, looking at the regulators, the financial institution, could help us also to accelerate that. So what I'm saying is there are ingredients looking at the SWIFT business that could help us also very much in going into new technologies.
Yeah. I agree with that, because if you look at the blockchain, typical used for cryptocurrencies, there are three fundamental problems that I think SWIFT has solved. And the first fundamental problem is cost, because at the current paradigm doesn't really work for large scale. The cost is too big to the compute cost. Second thing is the speed, which is still not at the required level. And the third is the throughput, how many transactions per second. I think SWIFT is very good in that. And I think, rewriting basically the fabric behind the blockchain, I think is a great opportunity that SWIFT can take on, and that we as an industry can take on, and basically build a blockchain fabric that is fit for purpose, because I don't think the current is fit for purpose. And that's, I think, a great opportunity.
So in reflecting on the conversation today and putting yourselves in the mindset of of our audience, given all of the topics that we've covered, what are your one or two pieces of advice for people facing the same issues you face, same issues I face, but really, what's your best piece of advice for people thinking about how the Internet of Things and how the world you're describing, as they're facing that, what would you tell them?
Well, I tell everybody that you should look a little bit in the past, not to copy the past, but to learn from the past. And there are companies out there who were very successful a couple of years ago, and they are gone. And obviously, we as banking, we have to reinvent ourselves, and we have to pay attention that we are not join the pack, which will be gone. So therefore, don't think because we are just big and important and regulated, we will survive forever. It's a very sobering news, but we should actually have to earn our lunch and our dinner and our breakfast every day and reinvent ourselves. If not,
I think we have to be careful to position banking as something old-fashioned. MIT did a research recently, about a year ago, looking at all the industries, looking at 450-odd companies, and putting them in a quadrant from beginners to digital master. And the digital masters have significant more revenue or return on equity and better productivity. Banking in general, and of course the exceptions, are classified in the MIT quadrant as digital masters. So I think we have been doing well as an industry in digitizing constantly. I think, I would not say this is the only thing, but I think having an open mindset beyond banking, an open mindset to fintech, an open mindset for other industries. I met recently the chief meteorologist of the Weather Channel, and only in chatting with him, we learned there's a lot of commonalities. So we can learn a lot from how weather prediction and banking is done, and have that open mindset, and keep evolving and thinking that 2030 is closer than 2000. Yeah.
I think it's important to acknowledge that the Internet of Things is only one indicator that we're living in a very fast-moving and changing environment from a technology point of view, from a business model perspective. And my advice, my tip is always to think about acting like a head coach. And a head coach, you have to find the right working environment, you have to build the right team, inject the team in the ecosystem it's growing outside the bank, and making sure that both worlds are connected, because that's the added value you can bring, is understanding what can we leverage, use for your own business will be critical to be agile and be responsive in a very fast-moving, changing business environment.
I'll add mine to the mix, although I appreciate the points of view that you all have. I think the one point that's clear and completely indisputable is that the future does look very different from the past, and that the rate of change almost makes a conversation around Moore's Law and the other things that we talk about as classic technologists, almost makes the concept obsolete. I think that we also have to remember we're making decisions that are not 6-month decisions, but the calls that we're making every day are 5 and 10 and 15-year calls in terms of investments and outcomes. And so I guess my piece of advice, as we all think that through, is every single decision has to count. Every single decision has to be directionally correct to the marketplace and the commerce and the capabilities of the future. And for those of us who have to perform at scale every day, that can be a very, very tough thing to realize. But every decision has to count. Well, I think you can see that we've had a great set of panelists up here, renowned in their individual professions and in their firms, but also really renowned in their perspective about how things look going forward and the challenges we face, and how all of us as bankers and partners need to rise to meet those challenges. So please join me in a big round of applause and thanks for our panelists. Thank you very much to all of you for being here. This has been a great conversation. I hope you find it useful as you go through the rest of your week, and enjoy your SIBOs. Thank you very much.